So let's look not at Bitcoin because everyone looks at Bitcoin. I want to look at gold instead because I think over the next while, I believe Bitcoin's price action will begin to look a little bit more like gold. But the reason why I want to look at this is because there's far too much pattern matching and fractal approaches that people apply to Bitcoin. They look for they look for the prediction of Bitcoin's next move by looking at Bitcoin's past moves. I don't think that's the right way to do it. So, just as an example, look at the way that gold moves. I wouldn't even say in this trend because, again, if people are looking at, oh, well, Bitcoin's like gold, they're going to look at the most recent one. Let's look back to when gold was a smaller asset, right? And you have a bunch of these. I need to clear some of this shit off. What the fuck? What happened there? How did I do that? Did I just delete all the indicators? Okay, remove the drawings. There we go. So, in any of these phases, let's look at this one for example. In this strong trend, which takes gold above, I believe it's above all-time high, or no, not quite. It's trending through the range. Regardless, above most recent highs. Where am I looking here? I've lost it. I've completely lost it. Where the fuck was it? My brain's gone. Here. It has a strong trend all the way on the daily bands. However, it does go below them significantly, many times. The bands never lose their trend. The bands stay sloping upwards, the bands stay green. Your opportunities to buy, and I think this is especially true on Bitcoin, are when it sweeps out levels like this. It moves up, it moves up, it moves up, looks like it's never going to pull back, boom, sweeps. Take out the leverage. Because why do you feel like, apart from in the real world where people, a lot of you guys do, like, you guys own a lot more Bitcoin than the average retail trader would, because we're all Bitcoin maxis, right? And I know many of you don't hold Bitcoin or don't hold that much, but the people you see online, especially on like crypto Twitter, they hold almost none. What they try to do is trade Bitcoin. So they want to hold alts because alts go up more, right? That's the logic. And then whenever Bitcoin goes to move and it starts a Bitcoin dominance run and Bitcoin starts to outperform, they want to try and trade it. So you can very, very easily just sit with patience and wait for them to get taken out, because we know people are not going to be spot buying this Bitcoin rally. Even in, most people's wildest expectations for the next, what? And let's just play this, just run the logic here. In most people's wildest expectations for the next 2 months, Bitcoin goes to 90k. Let's say, right? Between November, December, by the end of the year, could we be at 90? Maybe. That would be pretty unheard of for Bitcoin to do that in a halving year. And I would suspect that we're probably not there by then. I think it probably happens early next year. But let's just say that happens. That's 90k, right? So do you think that the average dumb money retail bag holder participant who we're trying to take their money, right? We're trying to beat those people who don't have discipline, don't have processes, they trade on emotions, they trade on FOMO. Do you think that they're going to be spot buying Bitcoin with an expectation of a 26% move in the next 2 months? No. They're going to 10x leverage it. Because if they 10x lever their whole portfolio on Bitcoin, they're looking at this and saying, we're at 25%, okay, if I 10x leverage it, that's 250, okay, then I can, 3.5x my portfolio. That's what they're trying to do. And so, that puts them vulnerable to shakeouts. And you don't need to use these, I've ranted on this before, but liquidation heat maps are just fake news. But it doesn't need to go down 10% for somebody with 10x leverage to get wrecked. Because you're assuming their exact entry price, number one, right? You don't know exactly where they're entered. You're also assuming that they're not levered across the board, and they are. You have to think, if somebody puts their money into Bybit and goes 10x leverage Bitcoin and has the coin as collateral, they're also going to be tempted to open up an altcoin trade here and there. People get their entire portfolio balance cross-margined and over-levered in these environments because they get carried away and they find that they accumulate positions. Not accumulate like a professional where you build a position. They accumulate a large number of positions. You've probably been there. I certainly have been there. I've been in past bullish runs where you go from having no positions to suddenly the market breaks out and you get long Bitcoin and maybe one other, and then it keeps going up and you're like, oh wow, like this is working, swing trades, and you add another and you add another. And for a few days or a few weeks, it all works. And next thing you've got 7 longs open in the most correlated asset class in history, meaning when everything goes down, it goes down together. If you've got anything more than 2 longs open, I'm talking long trades where you have a stop loss, a liquidation price. I'm not talking about holding spot coins. That's a bit different, even though they're still correlated. You're not going to get wrecked on a wick, right? Strongly advise that for the next few weeks, if we keep being bullish, you do not have more than like 2 swing trades open that are basically the same thing, right? I'm long Bitcoin because it's holding the bands, and I'm long Solana because it's holding the bands, and I'm long Doge because it's holding the bands, and they're all on a 4-hour time frame, whatever. You're concentrating risk, right? You're adding risk. You're not diversifying by having different coins. You're adding risk, concentration risk. So you have to be really disciplined to stay with the process that is the one you built or are building, right? And this is the classic FOMO, right? If you're in the middle of building your systems, if you're in the middle of sizing up, so you're not at full size yet, if you're dollar trading, if you're at white belt, you're going to feel like you're missing out. You're not missing out on anything. You can hold coins. You should be holding spot, right? Nothing wrong with holding some Bitcoin. I mean, everyone's been doing that for months and months and months. The FOMO thing is, oh no, I need to buy this or buy that or long this or long that because this next 6 or 8 weeks is the only chance I'm going to have to make money. No, it's not. Because if you don't know what you're doing, it's just a chance to lose money. People lose in these uptrends. Case in point, right? In this entire move, just imagine this was Bitcoin, because I think Bitcoin moves something like this in the future, right? In this entire move, gold just goes up. But it only goes up from 400 to 450. That's not a lot, right? That's like 12%. So what people will do along the way, and these are the ones who lose, is they will get over-leveraged at the highs and get flushed at the lows. And get over-leveraged at the highs and get flushed at the lows. And get taken out on all these wicks, which when you zoom out and you look back, these wicks don't seem like anything. And the market has a very short memory. This also happens on Bitcoin. These wicks don't seem like much. This was just absolute carnage. That day was just, I remember, it was fucking crazy. And it was nothing. Zoom it out, you can't even barely see it. Right? And we haven't had one of those days in quite a while. We haven't had a bullish shakeout in ages. We've had actual sell-offs, which is what these are. That wasn't a bullish shakeout, that was just a sell-off. A bullish shakeout is where you have one of these deep wicks and then the market goes higher. That's coming. Right? Once people get themselves badly positioned, that kind of stuff is coming. It's also a sign that we are, going to start slowing down to the upside. Because that means people are chasing and chasing and chasing. If you want to see sustained rally, you see this kind of thing where the market's just relentlessly marching higher. It's not doing massive pumps. When the massive pumps start, we're close to the end. Now, that doesn't mean the end as in it has to do another 9 months sideways. It means we're slowing down to go into some kind of consolidation. Because as it moves up and up and up, people get long and long and long, and then time takes them out, even before price does. So, daily bands, if it's going to be if this is it, if this is time, daily bands, follow the trend. If it's not, and the bands start to fail and cross red, consolidation, which takes time, consolidation. Like once it loses the bands here, once it lost the bands on the 1st of October, it didn't break out till the 15th. That was 2 full weeks of consolidation. But what happens is people try to long this next day and long that and long this and long that and short that. You have to understand that the only time for it to have immediate continuation is when it's holding its strong trend, its fast trend, which will probably be the daily bands. If they start to fail, expect a few weeks of sideways. And last thing, which I talked about, look out for these divergences, right? So you'll see this all over, and this is not a sign to short. This is a sign of a pullback potential. There's a difference because you don't need to short in a bull market necessarily because it can just keep going higher, right? Because it's a bull market. Bull markets are supposed to go up. But when you see price making an equal high or a lower high, and open interest in that consolidation going significantly higher, you measure the positions that built from the first top to there. That's another 750 million of open interest was added here, while price did not go higher. After a run up, and this is Bitcoin, alts, you can use this in any coin. After a run up, right? After we've had a significant rally and a breakout, and there's gaps below, there's clearly areas where people could get, even just this, right? People can just get stopped out with a wick down to there. And you see price coming up like this, and you see 750 million of new positions when the market does not go higher. That's a sign that potentially people are offside long, right? They're getting too long too soon. Now, it doesn't mean you rush into short because we might just keep going higher. It does mean that there's a high probability that there will be some kind of shakeout. And that can be something as simple as, like I said, just down to the most recent lows. And on trade of the day, I'm actually going to look at GOAT. So on daily levels, I'll look at this. And if you want to see Bitcoin right now, breakouts that hold, the gap should not fill. So we already have this. We've had Bitcoin come up here. There's a gap on this candle, right? That gap is not filled yet. That is showing that Bitcoin is respecting its 15-minute trend and it's respecting this gap. So if the market gets itself too long, and if there is some kind of pullback, I would expect that pullback to come back to about here, but then hold, and then go higher. Because it pushes up, it comes down, or just drops from here, whatever. And here, people start to short or think that's it, it's going down, we're going to go lower. But if it holds and respects this gap, and you see it holding, which would look like it probably goes below the bands, and then reclaims them, that's a continuation signal. That's where you day trade it long, and get long again. Because it's an uptrend. When it breaks from the gaps, watch for the gaps to hold, not to break. If they break and it starts to trade in there, that's when a deeper correction can come. If it doesn't, then expect it to continue in the direction of the trend. So don't be trying to fight trends. There's nothing wrong with shorting if your systems tell you to and you have reason to do so. But watch for these areas where price does not go higher and open interest continues higher. That is not a reason to short, but if you have a low time frame sign of reversal, that's telling you there's 750 million. Whoever's on the long side of that is offside if price starts to reverse. And that's why it'll probably move very quickly down to wherever stops would be resting. They would just have to close en masse. And then you're watching to see does the gap hold or not. Right? So this is not just for today. This is for entire bull markets. Bullish moves on Bitcoin and on alts. You want to see the move up that makes everyone FOMO, and then the following consolidation, and then the next attempt to break. If you see open interest outpacing price, it can be a sign of short-term overleverage, which can lead to a pullback, right? And so it's 12 now, so New York session opens in about an hour and a half, so maybe it's not till then. You might see an attempt to break out at the beginning of New York, flushes back down. If it holds there, that's going to rebuild and just go higher again. Because there's too many people trying to chase this leg, they're trapped, down it goes, they're flushed, and if it starts to rebuild and you get back above, then it goes again. It is a bullish market. The 70k break is real. That's a big continuation sign in the short term. If there's going to be a deeper correction, I would suspect that it doesn't come until we've seen a bit more chasing, and it probably doesn't come the day of the breakout. It probably comes a couple of days later, or even weeks later. So you can both be correct and for a pullback, I fully expect it. I fully expect that we'll revisit 65 at some point, 66, maybe even 64, but it doesn't have to happen right away. Even just look at this breakout. With this candle and this one, and it was 1, 2, 3, 4, 5, 6, and on the 7th day we started to pull back. Not the day of the breakout. And you can see these wicks on these daily candles. This is people trying to short it, trying to short there and short and short and short and short. So don't fight the trend. Follow the trend. And that's it. GM. GM.